Today is really not about me. It's about another member that's done wonderful things. He's on the national team. Clark, can we get you guys on?
You're from
Yeah,
Tennessee,
man.
Kentucky, right?
I'm sorry?
Where do you live, Clark? First off,
Nashville, Tennessee.
Nashville. Okay. Do you have a banjo and all your teeth in? Just check.
As far as I know, yeah, as of right now, and they're all real.
Okay. Okay.
Man, that's a real cool chair you got back there, man.
Yeah, a little bit of British. Yeah, I try to be
Oh,
cultured
look
out
at
here.
that.
Also, there's a little bit of there's a cowboy hat. I might as well show you guys that.
Wow. Wow.
I figured flash a
I
little
was
bit.
thinking that British people don't have teeth.
Thanks for having me on, everybody.
Man, thank you, Clark, for giving back, man. I know that you're a relatively new member. You joined recently, and
Right.
you got kind of the ball rolling pretty quickly, man. Tell us a little bit about yourself, and from there, I'll let you kind of talk a little bit about yourself, my friend.
Yeah, sure, absolutely. Well, thank you again for everyone, and hello, Lifestyles Nation. So, born and raised in Nashville, excuse me, in Tennessee. Born in Knoxville, lived in Chattanooga for a couple years, then moved to Nashville for a medical device position about 12 years ago, and that's been my primary day job. And then just to kind of fast forward, nothing too special, I started an Airbnb company about 5 years ago, with one of my good buddies. And we built that up we had 2 townhomes, a 5-bedroom house, and then 59 apartment units. So we were rocking and rolling. It was actually before the pandemic hit. We grossed over $1 million. So, and we were poised to double that with the contract we signed. So, which takes me to, of course, the pandemic. I literally had to dismantle our business piece by piece, building by building, unit by unit, because we had no income, we had no revenue, and I was frantic. We turned our short-term houses to long-term. It's the first time I'd ever done it. I toured it myself, and it was my first taste of the buy and hold world. And at that time, I also started frantically looking around for other ways to supplement the revenue that I'd lost. And after looking at a couple of looking on a couple different sites, a couple different real estate groups. Someone was talking on one of the forums about how they were able to amplify their buying power by this program. And I reached out to them and said, "Hey, can you give me a little bit more information on what you're referring to?" And he said, "Look, I'm not trying to sell you this. I get nothing out of this, but you may want to check out this program called Lifestyles Unlimited." And to put a little bit more background, I literally was a complete non-believer. We're talking, I don't believe in this. I was Airbnb all the way, long-term buy and hold, blah, blah, blah. You can't make any money doing that. So I mean, everybody I even talked to, because I vetted Lifestyles for a good 2 months prior to making the jump in October. And of course, even in the middle of the pandemic, I had lawyer friends saying you're going to get robbed. There's no way. How do you close something remote? You're going to buy something that a house you've never been to. Anyway, so finally, I made the jump. I spoke with a couple members, and I said, you know what, it's time to pull the trigger. And so that takes me to when I joined Lifestyles in October 2020. And I don't know if you want to change the slide, but I went through all the videos, which I highly recommend. I mean, I watched the first one all the way through the last. And really what I was wanting to do, let me back that up. Before I started doing that, my goal was, because I'm also in medical device, I am will work with a startup company. So I thought, okay, if I can build some passive income to replace my basic needs and necessities, that's true freedom, which I know David was talking about earlier, that once you have your basic needs met, that is a unparalleled freedom and feeling that allows you to do a lot of things that you wouldn't necessarily do. So I guess we can maybe touch. And also want a more stable business model, because Airbnb, it's not bad, but look, it's all frills. It is not. It's basically, the way that I kind of explain it is a castle made of sand. It looks really pretty, but easily washed away, when the tides turn.
Let me ask you a quick question, Clark. And I know Dell asked this question a lot, I always like asking as well. When you did the 2-day and you had some real estate experience with Airbnb before. When you went to the 2-day or the 4-day part, I'm not sure which one you went to, what was your aha moment that realized, well, this was not the right way, this seems to be the right way? What was that moment for you?
Right. So it's a little unique maybe experience than other folks, because I did the 4-day class, evening classes, and Lee Reeves was the presenter, and he mentioned that he lives in Nashville. And so I said, okay, after listening to his whole presentation, I thought that's phenomenal. I said, but I need to see if this is real. And so Lee was kind enough to meet me in Franklin, because he lives in Tennessee now, actually about 20 minutes away. And when he sat down and frankly said, look, I'm just like where you were. And he flat out said, here's my progression. There's no bones about it. I get nothing out of it if you join, but here's my progress. And basically he said, if you want to be a millionaire, this is how you do it. That was the day we met and had lunch, and that was it. I said, this is it. I think I joined maybe a week or two later. That was it.
That's awesome, man. I experienced the same. I had the same experience when I first joined, of members being frank and open and showing their books and their numbers and sharing information. That's always just. I always get such a kick out of the fact that members are so open. They have such an abundance mentality to be able to continue sharing and giving and moving forward. But thanks, man. I appreciate you sharing that, man. Let's go to the next slide, guys. All right, so tell us a little bit about this property. I know you joined in October 2020, and I know you closed on this home in January. So we're looking at about 4 months after 3 or 4 months after you started. You had already closed on this property. Tell me a little bit about this one.
Right. So this was actually a terrifying event, because as soon as I closed, it was right when the storm hit. So, I mean, literally, I closed on Friday, and then the Texas storm hit. I didn't know. Yeah, I was terrified. But anyway, obviously, thanks to you, Isaac. And by the way, I can't say enough about you, man. Like, you are the wind beneath my wings. You were my shepherd the entire time, because I didn't know what to do. This is a guy in Tennessee. I'm like, oh my God, it's all coming down. Like, it's all right. I should have never done this. Like, this is you know what I mean? But anyway, so the house. It's 910 square feet, 3-bed, 2-bath, brand new build. You can see, this is kind of a model of what, some of the projects that, the lifestyle managers probably end up looking like. I went for just the cash flow. But you can see, I mean, everything's done. One thing that I did have to do is put in some blinds just to make it look just a little bit more livable. And then I also had to install a mailbox. But again, I do want to reiterate that this is in Montgomery, Texas. I live in Nashville, Tennessee. Never saw the place in person. Never stepped foot in Texas. No, had no issues with it. I just never needed it. So I worked with the leasing and inspectors, and everything remote.
I know that when we being in a different state and investing in a different state, period, it could be frightening. But even for the first time, I love the fact that you said, let's do this, let's do it well. And just through the mentoring portion, you gain confidence through the education, you gain confidence building your team, you gain confidence enough to be able to pull the trigger. And you start realizing, when you first were thinking about doing it to when you actually did it, it's a lot less scary than what you anticipate, because the training that you have and the education just gets you to where you build confidence enough to be able to do it. So the fact that you did this remotely 100%, I love it. And the fact that you went for a new build, I understand it. There's a lot of members that'll do that'll go this route. It's a good route. Many times the other route, which is getting the trifecta, is also a fantastic way. But I think if you're just chasing, and that goes back to what's your priority, and you're saying, I just want cash flow, this actually cash flowed really fast. And I know that you were excited because I think you put it up on the market. How long after you put on the market did it rent?
This was, I want to say, about 2.5 weeks. It was, well, I didn't have to pay for my first mortgage out of pocket. It really wasn't kind of down to the wire by any means. There's a lot of activity. There wasn't much stress at all.
One thing I want to say for new folks watching for the first time, This is a great example because I have people from all across America. I have people from Hawaii. What I love about Clark's story is he didn't try to do a huge fixer up for his first one. He's like, let's see if the model works. So there's nothing wrong with buying a great one here. Now, when we say the trifecta that Isaac, a lot of people want the big fixer up with a doubling capital gains. He just said, hey, let me make some cash flow. I want no headaches. So I love this model that you did, Clark. So I want people to know that, going in.
Sure.
Good point, David. I like that. Let's go to the next slide, and we're going to look at some numbers. All right, cool. So this is a little different than what a lot of members maybe look at, and you're going to see something there. You'll be negative equity. Oh, my. But look at the next slide right after, and it's going to make a lot more sense for everybody, okay? So as he said, it was appraised at 132. It was purchased at 132. He didn't have any equity because what he wanted was cash flow, just get his foot in the door. Let's try, let's see if it works. He put a couple dollars in, new mailbox, blinds, closing costs, and now he's sitting at about negative 5,000 in closing costs. I'm sorry, excuse me, in equity. But let's go down a little bit. His out-of-pocket was $29,800. His return on capital gains is 0, which is fine. But let's look at his rent and look at his cash flow, guys. This is a 900 square foot brand new build. It rented in 2 weeks or so for $1,375. That's an annual rent of $1,650, and his cash flow, everybody, is $651. Guys, he's cash flowing $7,800 a year, which is a cash-on-cash return of 26.2 on a brand new build. So you look at these numbers, and nowhere can you get 26.2% cash-on-cash in any other vehicle of investment, especially from day one. As you heard, he closed on it. 3 weeks later, he had checks, and he was already making money within 3 weeks. Guys, he didn't have to lift up a hammer. He didn't have to nail any walls. He didn't have to deal with any contractors, which is great. Hey, I did it. A lot of people do it on the first time. I think this is a great way that a lot of people that maybe are a little bit more afraid or a little bit more skeptical can jump in and be able to experience what Clark did. Let's go to...
Look at this as well, Isaac. It's making, let's say, 25% round number, right?
Yeah.
Clark, what are you going to do to thank your renters next year? What are you going to do when it's time to renew the lease?
What am I going to do?
Yeah, how do you thank them? Do you know what the answer is?
I don't know. I was going to say peeing my pants happy to get the number, but I don't know. You do it for
that's happy. You're going to raise the rents, are you not? You're going to make more money. So, we'll go from a 25 to like a 30, 35. But just let's say a 25% return, right? Next year might be 30. Next year might be 32%. Do you realize, guys, after 3 years, you made 100% return? You literally double his money just off cash flow. But guys, in the back of your head, I want you to think about it. You make money 5 ways. Now, this one, we didn't have the equity capture. But is this house going to go up in value? Absolutely. It's going to appreciate in value. Is that renter paying down his mortgage for him? Absolutely. So even though we're only showing one way we're making money, in the back of your head, guys, think 5 ways. This is how we mitigate all those risks in the market. Okay?
Excellent. Thank you, man. I appreciate that. And for some of the skeptics, let's go over here real quick. So he bought this at the end of January 2020. I reached out to the Lifestyles Realtor this week, and I don't think Clark saw this, but I reached out to him and I said, can you give me a CMA in this area for this home at the moment right now? So end of January, beginning of May, you're only talking about March, April, actually February, March, and April in between. Guys, this house in 3 months, really it's already appreciated over $6,000. And this is confirmed to me by a realtor that said, yes, this is the square footage that he could sell it now at the moment. So remember that negative equity of $5,200? It's already been erased. He's already in positive equity plus making cash flow, ready to go in about 3 months. So
Clark, here's my question. You're doing Airbnb.
Correct.
Once you put a renter in there, it's hands off, is it not? In your Airbnb, you had to organize the cleaners and all this, and is it less time on this once it's up and going?
It's comparable. I'm doing this myself. I'm managing this myself. If there's an issue, I can make a phone call. That's it.
Yeah.
Not a problem.
And I want people to understand, because I do get a lot of people, it was so sexy last year. Everybody wanted to do Airbnbs, well, I'm saying before the pandemic. And I'm like, guys, We've been doing this 30 years. Shiny story. I love what you say. I'm going to steal that from you about it's like a sandcastle, because that's a perfect example. It's good till the day it's not, right? So
Right.
I get a lot of Airbnb questions. I'm like, what's my rules? Never lose money. I can't take the risk if the economy goes down that that's a luxury, which Airbnbs are. I mean, I know some people survive with certain areas, like they had traveling nurses, they were okay, but other people in the higher end stuff, they're upside down, they're losing. So, thank you for sharing that though. That was cool.
Sure.
Yeah, I agree.
And I want to ask you a real quick question, Clark. I know
Sure.
you're a total skeptic. Lee's a great guy, taught the seminar. You followed what he did, now you took action on it. What advice would you give to other new people watching for the first time, buying stuff across state lines, because that's your example tonight? How to get over that fear? What would you tell the new people?
Right. And it's very simple. I would talk to lifestyle members. Talk to folks that have done it before. You know what? I might even go out on a limb and say I would be open up. I'd be happy to chat with some folks. The best way to go through to jump into this is demystify it. Look into the financial freedom program. See all that, like understand all the resources that are available, and at some point you're going to have to just pull the trigger, and there's really no mystique behind it outside of once you've realized that this is the time, you've got to pull the trigger. Start small and make the move. You don't have to go big. Make something that it's not going to make or break you, but get in, start, do something, move the chains.
And it looks like you didn't buy just one property.
Yeah, I got to be honest. I was hoping you guys were going to ask about it. Yeah, I actually went ahead and bought 3. I closed on 3 properties within a couple of weeks. 2 of them are in Texas and 1 in Nashville. But
It's addicting,
yeah.
isn't it?
I'm sorry?
It's addicting.
It's funny, David. You've actually. I remember one of your seminars. I thought, I could do this, and I think it was you that said this. Buying a house, to me, and I don't know if anybody else out there would think the same, I was terrified. I mean, I bought really just a couple houses with my partner with a little bit of safety, but it's still terrifying. Now I can buy a house with my eyes closed.
Yep.
And I could buy 10 more if I wanted to, but I'm with you. That's not the route I want to go. I don't want to manage 120 houses.
Yep. Yeah, and that's it. You got to grow. Can't get rich slow. Houses are great to get a comfortable living. There's nothing wrong with that. Yeah, you'll make 50, 60, 70 grand a year. You'll never make $500,000 a year off houses. It's just not scalable. That's why we get to apartments afterwards. So, yep.
And that's right. Wow. That's actually the next. As soon as I get my both Texas houses are rented, and then once the Nashville house is rented, which should be coming up down the pike, I'm jumping into preferred investor group. Looking forward to seeing you there.
Yeah, to dip your toe to see if it's real. I get that.
I did. I'm a believer.
There you go. Yeah, it becomes pee in your pants exciting. Trust me, after your first apartment, you'll say, why did I buy those stupid houses? Everybody does. But this is what got you there. So I'm glad you did that. Glad you took that step.
Yeah. Thank you for everything.
Yep.
That was great.
All right. You want to thank anybody?
Sure. Yeah. Pat is a phenomenal inspector. He knocked down both of my on call, like very on call, very accessible. Moon Kim is a machine. He absolutely walked through every step of the way. And when someone has your best interest in mind, and Moon absolutely did. He was there, very accessible, as busy as he is. And of course, there's no way I can't call out to my boys, Joe and Isaac. Isaac, I wore you out more than Joe. I think Joe probably just passed the torch and said, man, this guy's not going to leave me alone. Here, you handle this. But Isaac, and the mentors, I mean, overall, I kid you not, once I started talking to them, and I think I even spoke with the mentors prior to jumping in, the transparency, the availability, and the wisdom, the guidance, I wouldn't be, it sounds great that I did this, I bought 3 houses. I really didn't. Isaac was right there the whole time. Like, I see this with humility. This would not have happened remotely close to happening without Isaac. And of course, the Lifestyles Education Program to back it up.
Yeah, I find it mitigates your risk. All this information's out there all over the internet, right? But having it where you can call someone up and when you have a headache and they can answer it, I mean, that's priceless. Mitigate your risk.
Absolutely.
Okay, you guys ready to take some questions from members? There's Danielle.
Hey, Danielle.
All right, hi. So we have some really good questions here. So I'm gonna actually scroll up. Okay, so the first one was from Vicky, and Vicky said, Clark, when you decided to buy in another state, how did you choose the area without knowing it? Like, not going and driving around.
Right. So there's a couple ways to do it, and it's interesting because I didn't know either. And I talked to a couple of the mentors, honestly, and said, "Hey, where do you feel?" Because Texas is massive. I don't know Texas. Now I know where Houston is. But I just asked her opinion. I said, "Where do you think would be the best spot to kind of try and dig in?" And I did a little research on my own. And so basically, after finding out, because Dallas is really, there's a lot of members there, and Austin's still up and coming. I thought Houston was a kind of a nice medium, and so I decided to plant my flag there. And of course, I actually talked to both the Austin as well as the San Antonio agents, or excuse me, mentors, and just to kind of get a feel of where they think the lay of the land was, and I kind of landed right in the middle. Hope that answers your question. If not, I can.
No, I think that's an awesome response there. Next question I have is from Sunayana, and it says, did you use a property management company?
No. I used a leasing agent, absolutely. But other than that, no. Right now, I've had them for about a month or so. Not a peep. No issues.
Yeah, and if you're new, guys, in the seminar, whether it's me teaching or lead teaching, we're going to show you every step of the way that you can do that. How to screen your residents, we teach you all that. Okay.
Question is from Kelly, and Kelly said, how many houses did you look at and analyze before you decided to buy this one?
Oh, that's a good question. Because when I initially coming out of the gates, I was looking at a lot of the wholesale properties, and I wasn't sure if that was the route that I wanted to go. And so I started to just kind of let folks know that I may be looking for something a little newer. So probably look at, 10 to 15. If not more.
Let me clarify that, Clark. Look at means, oh, here's the paper, here's an email. You didn't go and look at anything, did you, physically?
No, yeah, and I'm glad you said that.
Because they're going, how do you do that? Do you fly in there?
Yeah, and you're right. So let me dig a little bit deeper, more granular. When I look at, I joined Quest as well, which is a phenomenal software. I'm sure there's others out there. To me, it's MLS in a can. It's perfect because what it allows to do without going too deep into it is, let's say, Moon or, one of the agents sent me something, I'd immediately put it in. Well, they'll send you the Quest, and then I immediately run my own numbers. And then it's really hard. It really demystifies everything. And I don't want to go too far down the rabbit hole, but I would say analyzed it probably at least 10 to 15 before I made the move.
And in simple English, for the new people who have no clue what Quest is, we load up our backpacks, we get magic items with orcs and chocolate. No, what Quest is a software that allows you to evaluate deals. So yeah, the realtor sent him numbers, but he's like, I'm not sure. Let me run my own numbers. And you put it in there and it figures everything out, all the math for you. That's simple to explain it.
That's what you and I do when we buy properties. We haul out the adventure pack. I agree with you.
That's right.
All right, next question is from Scott, and he said, Clark, how did you come up with the money to buy 3 houses?
So I being in medical device and Airbnb, I actually had a little bit of a nest egg. So yeah, I had some savings. But I can also say my goal is to be cash poor and then start using some other financially savvy ways like HELOC, cash out refi. Again, these things were not even on my radar before Lifestyles. So
yeah, guys, I'm going to break that down this weekend. How to find money, how to pull it out of different vehicles, how you can do that. But I want everybody to be realistic. This is no magic wand. You need money to do this. If you want to do a single family, it's going to take you at least 30,000. Okay, so if you don't have 30 grand, get a job. Save up till you have 30 grand. Okay, yeah, just be unrealistic with people.
Andy asks, just to confirm, so you are self-managing your Texas properties?
Correct.
Okay, and then Amin said, did you have to get a hard money loan? I have not seen on the financial worksheet.
No, conventional.
No, guys, this was a new build. So he went straight conventional, 20% down or 15% down if you have PMI. I'm not sure how Clark did his. It's just a typical, same thing as if you bought a house kind of loan, okay?
And
You only
then
use hard money on fixer-uppers, just so you know. Okay.
the last question I have is from Ross, and he said he's seen other experts recommending using hard money loan and having no money out of pocket. So I'm guessing he's asking, would there ever be a case, even though this doesn't need rehab? This is probably more of a question for David, but is there ever a case where you would use hard money instead of doing conventional?
I do hard money loans all the time. If you guys want, I can show you 1 0 out of pocket. I do them all the time, or $3 grand out of pocket, or $2 grand. At the end of the night, after we go through all the questions and answers and stuff, stay on. I'll show you 3 or 4 different HUD statements on properties I buy for $3,000, $2,000, $5,000. It's not that I'm showing off. I'm not trying to impress you. I'm trying to impress upon you that yes, it can happen, but don't look for the golden unicorn. Look for an average base hit. This is a phenomenal deal. He puts out 30K. He's making 25% a year. That's freaking awesome.
I have one
It's
more
okay.
question. Clark, being from Tennessee, are you an Old Crow Medicine Show fan?
Am I what?
An Old Crow Medicine Show fan? The band?
Old Crow Medicine Show. I am not. I'm going to look that up as soon as I get off here. No, I'm not.
Absolutely.
I have to ask you a Tennessee question that's even more important.
Okay, yeah.
Let's do
What
it.
is the greatest racetrack in Tennessee?
Bristol Motor Speedway.
Thank you. Short track racing. Rubbing is racing. Everybody know that.
Okay,
That's
hey,
it.
before we- I got 2 last really good questions. I'm going to just sneak them in. So Leah asked, did you use an LU vendor as your lender for your conventional loan?
So it's interesting. I did not, but I spoke with several of them. And it turns out I went with a guy that actually is a local, like Nashville friend. He works out of my gym. He said, by the way, I could probably help you with this.
Awesome.
So yeah, so it was just kind of by fortune, but I would have, if it wasn't by serendipitous kind of chatting, that I would have actually, that was, a lifestyle vendor was right behind him.
Yeah, guys, what do we teach you? Get 3 estimates on just about everything. We don't care where it is. We want what's best for you in that situation. And that was his.
Let me ask you something quick, Clark. I know because I believe you had gotten or were considering one, and then from there you got a better quote on another one. I believe that's how it worked. What did you end up getting as your interest rate for this property? Straight conventional.
Sure. Actually, for both of them, actually all 3 of them, 3.125.
Peter, that's exciting. Remember that when I teach you guys this weekend, because I always say we're getting the interest rates of 3%, and then I get the skeptics. No, you're not on investment loans because my bank said. I go, your bank is full of idiots. Shop around.
Yep.
Well, thank you so much, Isaac and Clark. I really appreciate you. You inspired folks out there.